All right, let's try Max Sato from Mace News, if you're there.
Thanks, Paul. Governor, I'm not particularly criticizing your policy here, but when central banks raise interest rates rapidly or maintain restrictive policy to bring inflation back to target, it tends to make the inequality between the high and the middle to lower income earners worse. Is there any better specific way to coordinate among monetary, fiscal, and other policies to redistribute wealth and hopefully ease the pain of lower income earners?
Well, it's a big, broad question. First thing I'd highlight is inflation disproportionately affects poorer people. I mean, look at what happened when inflation went up. You know, where is it? It's been particularly in food. It's been particularly in rent. You know, these are necessities. You can't cut back on necessities. Poor, obviously, people with lower incomes, you know, necessities are a bigger part of their basket. You can't cut back on them. They are much more affected. They obviously have less saving, you know, smaller savings buffers. So, you know, the best thing monetary policy can do for all Canadians is to get inflation down. And, you know, that's particularly important for lower income Canadians. You know, more broadly, yes, you're right. You know, monetary policy, it's a broad macro policy. We don't have the ability to target individual groups, individual sectors with you know, different interest rates or different rates of inflation, different growth. It's a broad macro tool. You know, fiscal policy really is the tool that has the ability to target different groups, and fiscal policy is appropriately the responsibility of our elected governments, and I'm going to leave it to their best judgment on how to conduct fiscal policy.